Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. I'm the presenter of the material named Rezky Amaliah with name 36119071. I'm a student from the State Polytechnic of Ujung Pandang. This video was made to complete one of the final segment in the academic English course. Here is my presentation video. I will present a material entitled Summary of the State of the Service Company Accounting Cycle. The first material is the definition of a service company. A service company is a company in which carry out business activities as a service provider for meet customer desires. And according to Budi Utama Siregar, explained that a service company is a company whose main activity is trading service. Or it can be said that in a service company that the focus is service. In addition to the opinion of the two fingers, there are the opinion of Agi Hagara, who explained that the what is meant by a service company is a company that has activities in providing types of service to customers who need it. The next material is the step of the service company's accounting cycle. The first step in the accounting cycle is to identify and analyze transaction. The accountant or must identify the transaction so that it can be properly recorded. Not all transactions can be recorded. Transactions that can be recorded are transactions that result in change in the company's financial position. If evidence and can be assessed in monetary honest objective. After the transaction information is analyzed, it is recorded in the journal. Journal is a chronological record of transactions that occur in a accounting period. Record all financial transactions in detail. A general journal based on the data collected to make it easier for you in the next step. The next step is to pass transaction to the general ledger. The general ledger is a collection of accounting accounts, each of which is asked to record information about certain assets. Classify financial transaction data by types of transaction, date, account number, and name, and so on. The way a company transaction in related journal with cash will be entered in a ledger of cash. Then calculate the balance of each account in the general ledger to find out the total value of the account. Next is the trial balance, a list of balance in the general ledger accounts for a certain period. How to compile a trial balance is very easy. You only need to move the balance in the general ledger into the trial balance to be combined. The balance on the trial balance equal the amount of debit and credit. If at the end of the accounting period there are transactions that have not been recorded, there are transactions that are one-off or need to be adjusted. They are recorded in the adjusting journal. Adjustments are generally made periodically, especially when a report is to be reviewed. Then you must also create a second trial balance by transferring the adjusted balance in the general ledger to a new trial balance. The balance of the account in the general ledger are grouped into assets or liabilities. The balance between the group of assets and liabilities in this trial balance must also be balanced. For example, depreciation of equipment, unpaid rent, and so on. The operation of the worksheet will refer to the trial balance and adjusting journal entries. If you have created both, then the preparation of the worksheet can be done easily. The worksheet will provide information in the form of an income statement and balance sheet, but often will be the basis for making financial statement. The next step is to prepare financial statement based on the information on the trial balance after adjustment. The next step is to prepare financial statement. Financial reports are prepared such as income statement, statement of change in capital, balance sheet, and cash flow statement. After making financial statement, you must also make closing entries. Closing entries are only made the end of the accounting period. The closed accounting are only nominal account or profit and loss accounts. Entry it is to zero it or create zero relate account. Nominal accounts must be closed because these accounts are assets to measure activities or flows of resources that occur in the current period. The reversing journal stage is the stage of reversing several closed accounts to restore their balance. Reversed estimate account is usually a payment that is prepaid and not yet due. The next step is called the financial or initial balance because it is the final balance that is produced at the end of the period. It is called the initial balance because it will be assessed as the initial balance of the accounting cycle for the next period. Furthermore, the types of service company transaction. Types of company transaction, namely the first. This purchase transaction is an activity to buy a product. Purchase transaction carried out by service companies such as the purchase of equipment and work equipment. All of this is done to provide service and station to customer. Next, You must record other transactions related to the purchase transaction made. Other income as with other companies. Service companies also have a goal to make a profit. The income from service companies is income from service that have been provided. Therefore, service entrepreneurs will provide the best service. Income transaction must be recorded in the company's book, but cash and credit. Furthermore, payment of expenses in addition to spending money to buy necessities such as equipment and supplies. Service companies also have rents or expenses. As for examples of expenses that are easily incurred, such as the burden of electricity bills, telephone, internet administration, and other expenses. Furthermore, the receipt of receivable. Receivable is a sale or service provision made on credit. In accordance with the policy or agreement made, the customer will pay off the payment within a predetermined period, so that when the receivables are paid off, the company must also record it. And the last is investment or investment. When it was first established, there must have been a capital deposit from the owner of investor, while an investment must also be recorded properly, especially if the funds or capital obtained for owner patents. The next material is the characteristic of service companies. There are 5 characteristics of service companies. First, the main activity is selling service, because service companies do not make product. The main activities of service companies is only to sell or offer hire service. Second, do not provide product in physical form, as you know that services are intangible. So, service companies do not sell products that can be stored or viewed. Although the product cannot be seen, the benefit can be felt by customer of other. 3. The result cannot be equated. The results of service business are very subjective, depending on customer or customer satisfaction. Thus, the result of service operation cannot be equated between one customer and another. And the reason is because the size of each person's satisfaction is different. In addition, the equality of employees also depends on psychological condition, health, and so on. Therefore, is that there is not cost of goods manufactured. The distinction characteristic between service companies and other types of companies is the absence of cost of goods manufactured and sold. Service companies do not carry out goods product activities because they do not need production raw materials. This makes the financial statement of service companies do not contain information about the cost of production and sales. And the last one is that there is no common price standard. The needs of customer easily vary depending on their complaints or desires. So, the price of service cannot be set in general and must be adjusted to the need of customer. The next material is the characteristic of service companies that distinguish them from other companies. The characteristic of a service company that distinguishes it from other companies. Number 1, there is no cost of goods and there is no report on the cost of production, so that there are on accounting costs in it. Number 2, there is no inventory of any goods because what is sold is in the form of service. Number 3, if there is an office purchase, it will go directly to the equipment of supplies account.